All right, welcome to this critical explainer. Look, today I really want you to think of me not just as your host, but as your own personal financial advisor. We need to have a serious sit down about a silent wealth drain that's happening right now, literally right inside your bank accounts. Inflation is back, and honestly, it's hitting way harder than most people realize in 2026. My goal for this session is pretty simple. I'm going to show you exactly what these rising numbers mean for your wallet, and much more importantly, how we're going to protect and actually grow your money despite this tough economic environment. Okay, let's dive into this. Here is our exact itinerary to stop the inflation leak. First, the diagnosis. Second, the hidden loss. Third, defensive financial moves. Fourth, offensive wealth strategies. And we'll wrap it all up with your 2026 action plan. Let's get to work. Starting right off with Section 1, the diagnosis. We really need to face the stark reality of our 2026 economic landscape. 28.4%. Wow. That is the massive spike in gas prices over the past year alone. When you pull up to the pump, I know you are feeling this directly. The latest government data shows that overall inflation has jumped to 3.8% in 2026. And you know what? That is the highest level we've seen since May of 2023. And look, it is definitely not just gas. We're seeing rising costs absolutely across the board. Groceries, up 3.2%. Shelter costs, up 3.3%. Pretty much every single purchase you make is costing you more than it did 12 months ago. This is the core problem we're facing together today. The ground beneath your finances is shifting, and it requires some immediate advisory intervention from us to make sure you don't lose your footing. Which brings us to Section 2. The hidden loss, or what I call the silent tax. Consider this the tough love portion of our consultation today. I have to expose how sitting in cash, just doing nothing, is actually making you poorer every single month. And this brilliantly illustrates exactly what I mean. The math here is just devastating when you leave your money stagnant while prices surge. On one side, you've got a regular big bank savings account lazily earning a pathetic 0.01% interest. On the other side, you have current inflation running at 3.8%. If your savings account isn't keeping up with that 3.8%, your wealth is literally evaporating, even if your bank balance looks exactly the same on your phone screen. Let me show you exactly how this destroys wealth with a really simple example. Think of your savings like a leaky bucket. If you have $10,000 sitting in that regular savings account earning basically nothing, while inflation runs at 3.8%, your money loses $380 in purchasing power every single year. Not because the number in your account goes down, but because that 10 grand buys $380 less stuff than it did last year. Let that happen for 10 years, your $10,000 will only buy about $6,800 worth of goods. That is the silent tax at work, guys. So who actually feels inflation the most? It's really important to identify your personal risk profile right now, because the antidote here isn't panic, it's precision. Not all Americans feel this squeeze equally. The folks hit hardest right now are those with significant cash savings parked in those low-interest accounts. It's also retirees on fixed incomes, because, well, their monthly checks just don't automatically rise with these surging prices. It's lower and middle-income Americans who spend a much higher percentage of their income on absolute necessities, like gas and food. It's people carrying variable rate debt, whose payments just keep going up as the Fed keeps interest rates elevated to fight inflation. And finally, it's anyone who delays making financial moves because they're just waiting for things to quote-unquote calm down. Let me be crystal clear as your advisor. Waiting around during an inflationary period is always incredibly costly. Section 3, defensive financial moves. So the crucial point is, how do we plug these leaks? It is time to shift from agitation to empowerment with some highly concrete defensive financial moves. The absolute single easiest financial win you can execute today is moving your cash. That tiny yield at your big bank is 0.01%. Meanwhile, inflation is up at 3.8%. But a high-yield savings account, that pays roughly 4.9%. High-yield accounts at places like Marcus by Goldman Sachs, Ally Bank, or UFB Direct are paying significantly above the inflation rate. That means your money actually grows in real terms while sitting safely in an FDIC-insured account. Think about it. If you have $20,000, the difference between a big bank and a high-yield account is an extra $980 a year, for absolutely zero extra work. Next up, we defend your monthly budget. With gas and groceries up, being strategic saves you serious cash. For gas, use apps like Gas Buddy to find the cheapest stations, pay with cashback credit cards, and combine your errands so you aren't driving as much. For groceries, switch to store brands for your staples. Use reward apps like Ibotta or Fetch,
buy non-perishables in bulk, and really plan out your weekly meals to kill food waste. For housing, if you rent, you need to honestly consider if roommates or downsizing makes sense right now. And hear me on this, these are not miserable sacrifices. These are highly intelligent, tactical responses to a changed price environment.
Now, we also have to talk about your debt. In an inflationary environment, fixed-rate debt is actually kind of your best friend. Because money loses value over time, you're paying back that debt with cheaper dollars. If you locked in a fixed-rate mortgage at 3 or 4%, your real cost of that debt is essentially negative right now, with inflation sitting at 3.8%. But variable rate debt, that is extremely dangerous. The Fed is keeping rates elevated to fight inflation, which means your payments will just keep climbing. My professional advice: convert personal loans, HELOCs, and any variable rate credit to a fixed rate immediately. Okay, another incredible defensive tool is the I-bond. This is a severely underused, totally safe hedge. I-bonds are government bonds where the interest rate is tied directly to the inflation rate. So when inflation rises, your return rises right along with it. They're backed by the U.S. government, making them practically risk-free. You can buy up to $10,000 per person per year at treasurydirect.gov with zero fees. Now, full transparency here, there are drawbacks. You cannot touch this money for 12 months, and if you cash out within 5 years, you lose 3 months of interest. But for cash you absolutely won't need for at least a year, this is an incredibly powerful shield. Section 4, Offensive Wealth Strategies. Let's move to and see how this builds. We've defended your base. Now we're transitioning from just protecting your wealth to actively growing it, completely out of inflation's reach. Remember our golden rule for today. Keeping cash loses money, but investing in real assets is how you fight back. The best inflation-proof investments in 2026 are broad index stock funds like VTI and VOO, which track the total stock market and the S&P 500. Historically, the stock market beats inflation by 6 to 7% per year over the long term. Then there's real estate, either direct ownership or real estate investment trusts known as REITs, which you can buy super easily in a standard brokerage account. Property values and rents naturally rise with prices, making them a fantastic hedge. Finally, commodities like gold tend to hold their value, though I always recommend broad index funds as your primary offensive vehicle. But your investments are really only half the offensive playbook. The absolute most powerful long-term defense against inflation is making sure your income rises faster than prices. If your income growth doesn't beat 3.8%, you're falling behind in real terms. First step, ask for a raise, but specifically frame it as a cost of living adjustment. Employers totally expect this in 2026. Second, add a side hustle. Even bringing in an extra $300 to $500 a month drastically offsets inflation's impact on your household budget. Third, upskill. Dive into high-demand areas like AI, digital marketing, or coding so you can command higher pay. And finally, work tirelessly to build passive income streams that will grow over time. And that brings us to Section 5, your 2026 action plan. We have covered a lot of ground in this consultation. Now, let's bring it all together into a strict, chronological playbook to implement everything we've just talked about. Now, what's really interesting about this plan is that it completely eliminates all the guesswork. It gives you an exact, step-by-step rescue operation to execute right away. This week, you are moving your stagnant savings to a high-yield savings account earning 4.5% or more. This month, you review your budget and execute tactical spending cuts in your top 3 affected categories. This quarter, you boost your index fund contributions and launch that side hustle. And finally, over the course of this year, you purchase your $10,000 in I-bonds, convert any toxic variable debt to fixed rates, and formally request your cost of living raise. I want to leave you with a really fundamental truth of personal finance. The Americans who act now will protect their wealth. The ones who wait will keep losing. Inflation at 3.8% is completely serious. The hidden wealth loss is very real. But it is entirely beatable if you just follow the exact playbook we laid out today. As your financial advocate, I am urging you, do not be a victim of the 2026 economic landscape. Take control. I'll leave you with this final, provocative thought to consider right now. Where are you feeling inflation the most? Is it at the gas pump? Is it the grocery store checkout? Or is it your rent? Identify that leak and use the tools from this explainer to plug it today. Thanks so much for joining me for this consultation, and I'll see you next time.